Are you considering to invest in the stock market more passively and have a way to earn some dividend income on the side? Well, one great way for you to approach it is through investing in high quality exchange traded funds. And for this video, we're going to be talking about top 6 ETFs, exchange traded funds, that are available for Canadian investors to get exposure to the stock market a little bit more passively. And many of these ETFs give you more exposure to the bond market. So sometimes, as a result of that, your overall appreciation and return for your money might not be the highest, but in the meantime, you get a very high dividend distribution that you earn through these ETFs, and also you get less volatility because you're getting more exposure to bond market versus the stock market. Without any further ado, let's get into it. Okay, our very first pick here when it comes to top BlackRock exchange traded funds to invest for high dividend income is iShares Canadian Financial Monthly Income ETF with ticker symbol FIE. It is actually at a very low price of only $8.57, quite affordable for investors or traders to go ahead and actually add it to their portfolio. The year-to-date return at the time of making this video for this ETF is at positive 4.97%. What FIE offers is a diversified portfolio consisting primarily of common shares, preferred shares, corporate bonds, and income trust units that are issuers in the Canadian financial sector. And it also offers you with a regular monthly dividend income. FIE, if you look at the past performance return, the 1-year return for it has been a magnificent 31.59%. The 3-year annualized return is showing to be 14.62%, 5-year annualized return of 9.74%, 10-year annual return of 10.25%, and then the return since the inception of this ETF is at 8.76% annually. The inception date for this ETF goes back to April 16 of 2010. The distribution yield for the past 12 months trailing yield is at 5.60%. And just to put things into perspective and make sure we are clear how we define that, the trailing yield for the past 12 months is a yield that an investor would have received if they had the fund over the last 12 months, assuming that the most recent net asset value maintains as is. And that's the metric that we're going to use to compare these different ETFs here. Let us take a look at some additional information. For example, what is the cost associated with this ETF? There is a management expense ratio of 0.82%, which means if you invest $10,000 to buy FIE, in a year, you would be paying $82 in fees. From a risk level, this ETF has a medium risk. And the top holdings, if we look for FIE, first and foremost, it includes some other ETFs. For example, iShares S&P TSX Canadian Preferred ETF, CPD, which, by the way, is going to be one of the other ETFs that we're going to talk about momentarily. But aside from that, you get some exposure to corporates such as iShares Canadian Corporate Bond Index ETF. You get also exposure to top Canadian banks such as Canadian Imperial Bank of Commerce, Royal Bank of Canada, Bank of Montreal, Toronto Dominion Bank, Manulife Financial Corporation, National Bank of Canada, and Power Corporation of Canada, as well as IAG or IA Financial Incorporated. These are the top 10 holdings for this ETF. In terms of the sector exposure, your highest exposure is to finance or banks, which close to 49%, followed by insurance, diversified financials, and energy. This is more so focusing on sector or industry exposure, of course, to be more accurate. Our second pick here is a CHP, iShares US High Yield Fixed Income Index ETF. It's hedged for Canadian dollars. It is last available for the trading price of $17.30. The year-to-date return for it, though, is negative. So far in the year, it's down by 3.73%. CHP gives you exposure to a broad range of US high-yield, non-investment grade, fixed-rate, taxable corporate bonds, and access to approximately 500 US corporate bonds. Pretty much the exposure here is to the bond market. The yield here are paid the frequency of monthly as well. And if we look at the 12-month trailing yield, we are looking at 5.18%, slightly less than FIE. In terms of overall return, the 1-year return is showing to be at 0.82%, 3-year annualized return of only 4.32%, 5-year annualized return of 3.67%, and 10-year annualized return of 4.54%. Keep in mind that the total return represents changes to the net asset value and accounts for distributions from the fund. So it does take into account the distributions that we've seen. In that sense, these overall returns might not be the highest in terms of holding on to this. It just suggests that from appreciation perspective, this fund probably has not done so well, despite the fact that it's actually having such a high trailing yield from a distribution or dividend. You want to also keep an eye on the past performance because depending on the asset class that the ETF is investing in, for example, is it just in bonds or stock, or it's a combination of both, you might sometimes sacrifice your overall appreciation of your money that you want to grow it over time for just pursuing and chasing a high trailing yield. In this case, between FIE and CHP, definitely FIE has the higher edge in terms of not only high kind of return in terms of the distribution or dividend, but also much better performance overall in terms of the total return. So keep that in mind. In this case, that's why we are going to point it out for you so you're aware of those differences. In terms of the fee, if you look at it here, we are looking at a smaller fee at 0.55%, and the risk level is at low to medium. In many cases, when the risk level goes lower, you're sometimes sacrificing also your longer term total return. You're getting that distribution typically higher, but also you're kind of sacrificing, forgetting about the overall appreciation and growth of your funds as you invest. You're also able to hear the top 10 holdings for CHP as shown on the screen. Next, we are going to take a look at another BlackRock ETF. It's iShares Short Duration High Income ETF, hedged for Canadian dollars, with ticker symbol CSD. It was last traded for the price of $16.61, and its year-to-date return was negative 2.25%. Here, it's an actively managed diversified debt portfolio consisting primarily of below investment-grade debt securities, which actually can be used to seek higher yield and income as a result. It seeks to maximize total returns, consisting of monthly distribution with capital appreciation to preserve and also preserving capital. Though keep in mind the total return, which takes into account your distributions, is not the most impressive. The 1 year you're looking at 1.60%, 3 year you're looking at 3.55%, 5 year you're looking at 3.12% annually, and 10 year you're looking at 3.44% annual return. And the inception annualized return is 3.43%. In many cases, given how inflation has really gone out of control, these total distributions might not be the greatest. In many cases, investors might just be interested, mostly looking for the 12-month trading yield. In this case, you're getting that 4.91% yield, and these yields are paid to you on a monthly frequency, as noticed here on the screen. Let's take a look at the fees. Here we're looking at the 0.61% management expense ratio, and the top holdings include these items that are looked and shown here on the screen, including, for example, Kraft Heinz, Burger King, and Altice France Holding. Let us take a look at the fourth option here. This one is iShares US High Yield Bond Index ETF. As the name suggests, it gives you exposure to a broad range of US high yield, non-investment grade corporate bonds based on the market value rating, and it gives you access to approximately 900 US corporate bonds. It's available with ticker symbol 𝐋𝐻Y. 𝐋𝐻Y, if you look at its total return, the 1 year is showing only a mere 0.58%, not even 1%. 3-year annual return of 3.88%, 5-year annual return of 3.41%, and 10-year annual return of 4.40%. Again, not the greatest total return. What may intrigue many investors, potentially those who are retired, is the higher trailing yield. The 12-month trailing yield is at 4.88%, and it's paid on a monthly basis. The management fee here is at 0.67%. This is the management expense ratio, and the risk rating is at low to medium. If you look at the top 10 holdings, we are looking at companies such as TransDigm, Sprint, and Mozart Debt Mergers SUB. Next, we're going to take a look at our other pick. It's iShares S&P Toronto Stock Exchange North American Preferred Stock Index ETF. As the name suggests, it does have some exposure to a portfolio of US and Canadian preferred shares or stocks, but also can be used to diversify sources of income beyond just traditional bonds and GICs. The trading price for it was at $17.25. It is available with ticker symbol XPF. Just by the mere fact that you're getting exposure to stocks, you can anticipate some more volatility, but also better total returns. And it's truly the case, at least in the shorter term time frame. For example, the 1 year is showing 8.23% return. 2 year is showing an annualized return of 7% return. The 5 years probably is not the greatest, nor the 10 year. The 5 year is showing 4.44% annualized return, and the 10 year is showing 3.79% annualized return. Again, these total return takes into account your distribution from the fund as well. The distribution are paid on a monthly basis, as you see the distribution frequency, and it is showing to be at 4.47% for the 12 months trailing yield. In terms of the fee, we are looking at a fee of 0.50% for management expense ratio, and the risk tolerance is at low to medium. And the top 10 holdings includes TC Energy, Citigroup, Avantor, and a number of others that are shown on the screen. So far, our best pick definitely has been FIE, given its better total return as well as better and higher distribution yield. The last pick that we have here for you is iShares Diversified Monthly Income ETF with ticker symbol XTR. The last trading price for that was at $11.34. The year-to-date return is barely actually moved at only negative 0.31%. The total return here is showing 1 year return of 9.70%, 3 year annual return of 7.06%, 5 year annual return of 5.25%, and 10 year annual return of 4.82%. The annual return since inception is at 4.92%, and the inception date for this fund is at on December 19th of 2005. The distribution here are paid on a monthly basis, and the 12 months trailing yield is at 4.23%. The fee or management expense ratio for this ETF is at 0.61%, and the risk level is at low to medium. Top 10 holdings, we are looking at a number of other ETFs, including 𝐋𝐈𝐖, which is iShares Canadian Hybrid Corporate Bond Index, 𝗖𝐋𝐈𝐖, XSH, XDV, 𝗖𝐋𝐈𝐖, CPD, XCS, 𝐋EY, and XEB. These are all different type of ETFs or corporate bonds that you see in terms of the top holdings. And in terms of exposure breakdown, majority of it is to Canada, followed by US, and pretty much that's the coverage, as the name even could suggest. Majority is exposure to the North American, as you see here on the map as well. So as you notice, we did take a look at the number of top holdings from BlackRock iShares that have the highest 12 months yield. You see here the list. What I want to point out for you is that you have to always be careful not to just sacrifice your overall returns for the high distribution yield. And again, it might depend on your risk tolerance, and also it might depend on your stage of life. For example, if you are at retirement or close to retirement, you might want to choose options or ETFs that give you less volatility and perhaps higher overall return in terms of your distribution. Although maybe your funds might not grow the highest, but at least you're getting that passive, reliable income on a monthly basis that you can use to maintain or sustain your retirement years. That could be an option. But some of the other options that you're going down, you notice, for example, there are some of the ETFs that give you more exposure to higher overall return. And those are some might be interesting for investors who are looking not just for yield, but rather for average annual return. In this case, let us, for example, take a look at the list of the highest 10-year average annualized return. On top of our list, these are the ones, for example, XIT which is iShares S&P TSX Cap Information Technology Index ETF, gives you a highest annualized 10-year return. 𝐻𝐈𝐖𝐊 is on our second list, followed by CLU.C, CWW, XST, XSP, and XWD. These are the ones that have the highest annualized 10 years annualized return. And you'd notice also what had been their annual return based on the inception dates that are listed here as well. There you have it, folks. A quick look into different iShares, BlackRock ETFs that are good options for investors that are seeking more of a passive investment with higher distribution yield. We reminded you in this video that while you're looking at the high distribution yield, you shouldn't be forgetting about the overall return of the ETF, and also knowing what is the underlying assets for it. Is it just giving you exposure to fixed income and bonds, or is it giving you more exposure to stocks, or a combination of all? For me personally, I think depending on your risk tolerance and also your age, you might consider more exposure, for example, to stocks versus bonds. If you are perhaps having a higher risk tolerance and also younger in terms of your age range, you might want to give yourself more exposure to the stocks, because while they may not provide you the highest dividend, but over time they actually have proven to have the best type of return. Whereas if you are perhaps showing lower risk tolerance or closer to your retirement years, you might want to give yourself more exposure to bonds and less exposure to the stock. This way you lower the volatility and potentially can pursue higher distribution yields. That's really some considerations that might depend, of course, on your own decision, but something for you to be mindful about. I hope you found this video beneficial and gained something of value from it. If you did, don't forget to give this video a thumbs up and share it with someone who might benefit from the video as well. Here on Momentum Finance, we post every week several videos about investing, and this includes investing in the stocks, cryptocurrencies, and real estate, as well as ways to reach financial freedom. Thank you, and I hope to see you next time.